Paul, you called it, you know, a meltdown. Where are we right now? Sorry about the difficult one to start with, then we'll get to the easy ones. Where are we right? Because you obviously wanted to write your book, you know, over the past, whatever, a couple of months or so. You published it in last month.
I've speed written it. And one of the things I decided to do was that we must be in a finite event. Now, I might be wrong. I think the book tells the story of the financial meltdown. As you all know, we are now in a real-world economic meltdown that is, in fact, has taken over as the main story. 40% fall in exports in the world. Japan's trade down 40%. No, where we're in now is the real recession. And we can talk a bit about that. But the book describes the financial meltdown, which I think basically starts with Lehman on the 15th of September, and I draw a close to it around about the middle of November last year, simply for the fact of two events taking place then, which are minor events, but I was witness to them, one of which was the G20 summit in Washington, which was a non-event, and the other of which was Hank Paulson withdrawing the original bank bailout plan, and then saying on US television, America has humiliated itself as a nation.
So for those who don't know, just forgive me, but Hank Paulson
was the US Treasury Secretary. So look, the book describes this event that took place, but the event has sort of happened, and now the detonation is rocking the world. Let me just talk about Lehman. Okay, for a year, this world of investment banking had been freezing over because essentially nobody trusted anybody else about what they had all lent each other. The book describes, in a kind of backplot kind of way, that process of building up these collateralized debt obligations, structured finance, where basically loans are bundled together, ripped up. It's a bit, in the book I describe it like the magician's trick. Yeah, you come up, you take the watch, you put it in the bag, you take a big hammer, you smash it like this. You get a member of the audience, then you bring it back to life, and a member of the audience comes up and says, "Wow, you know, that's real magic. You know, the watch is it there in front of you." That was the process of securitization, the smashing and the bringing back whole. Now, as it turned out, the watch was really smashed. That was the problem, and the member of the audience they brought up was a patsy. What a surprise that was. That member of the audience in this metaphor is the Standard & Poor's, Moody's and Fitch, who just basically are supposed to rate these things and say, yes, it's legit, and they just didn't. Look, it's natural for anybody who has any relationship to stocks and shares or lives on them to want the stock market to go up or their investments to rise. What had happened, it's a whole other part of the story which we'll come to. What had happened, of course, in the intervening period was that a whole majority of us got pushed into reliance on what we call the financialization of human life, so that suddenly, yes, your pension, your future depends on the stock market. Not only that, lots of other stuff does. You know, housing, education, health, particularly in America, is all effectively privatized. It's all effectively financialized. You go to college, you take a loan out. 30 years ago in Britain, you took a loan, you were lucky if the bank manager would see you if you're a student. Now they're queuing up as you enter college to throw money at you. So the fact that financialization had taken place massively amplifies, yes, our interest in that, and that's the story until we get to 2007, when it goes wrong. If you want to understand why people have resisted, both here and in America, the state involvement in the bailout, it's this. Okay. Me and you, we move in the world. Lots of other people here I know work in finance and related industries. High risk, high reward. It's the basics of capitalism. Okay, I'm a Merrill Lynch city equities trader, and you bump into me, or I bump into the Merrill Lynch guy in 5 years' time, when it's all come back a little bit, and I say, why do you deserve the high reward that you get? And the logic tells them to say this: because I take high risks. But now we say, no, actually you don't. Because what has been proven is that for a generation, if this happens again in 5 years' time, the American government, the British government and the German government will bail you out again, because it's been established that the moral hazard having been stopped for Lehman, has now been imposed on the rest of the world. Now, and therefore you, the Merrill Lynch guy, are not entitled to the high risk, high reward equation. The taxpayer is.
So is this the end of capitalism as we know it, do you think?
Well, there's a lot of bankers wandering around saying it is, which is the weird thing. The only people who wander around saying it are people who think capitalism is absolutely synonymous with free market capitalism. What I try and explain in the book is that there have been different models of capitalism. None of them particularly work for long. Paradigms shift about every 30 or 40 years. But what I think we are in is a paradigm shift. We are at the end of one big wave. This is where the Kondratiev theory comes in, and we're at the start of another one. Now, what is the solution? See, I've seen close up, as you have, how the policymakers have had to struggle. And it's not with execution and tactics that they struggle. What they're struggling is the mind-blowing, what they're struggling with is the mind-blowing fact that what caused this was the thing that they thought was the source of all dynamism: deregulation.